Thanks for staying with us here at LiveNOW from Fox. I want to bring us out to a live image that we have of the Capitol building over in Washington, D.C. Of course, a major topic today that's going to be addressed all day and covered is going to be President Trump's State of the Union address that was just given last night. And an interesting part about that is that we asked our viewers yesterday morning and throughout the evening what they wanted to hear the most in terms of the themes that the president was going to be touching on. So I'm going to put up this. It was a question that we posed to you all. What do you want to hear about tonight? Of course, referring to the State of the Union address. And overwhelmingly here, more than half of the viewers who submitted an answer, 51%, said the economy and tariffs. It's a similar trend to what we saw yesterday morning when I posed the same exact question. So I want to break down everything the president had to say about the economy. To do that, bringing onto the program now Mark Hamrick. He is a Bankrate senior economic analyst. Mark, good morning. Good to have you.
Good morning, Carel. Good to be with you.
Let's just start with the basics, right? When we look at what the president had to say about the economy, it was similar to what we have learned over the past several months, that the economy is booming, that things are more affordable for Americans. However, affordability does remain the biggest concern for Americans, according to several polls. So when we look at what the president is saying versus what we can confirm through data and independent analysis, what are we seeing?
It's good to be with you, and I think this was obviously the president's primary opportunity to capture the nation's attention, albeit in a nearly 2-hour-long speech. A lot of this material is going to be shared and shared again, and so the idea is to try to dissuade many Americans who are giving him low grades, low approval ratings for his stewardship of the economy, as well as the other side of that coin, high disapproval ratings. So I begin with a couple of the concepts that he used at the beginning of the speech. One, that the economy is roaring and that it is a golden age for the United States. And at Bankrate, we keep that in the lens, or look at that through the lens of the U.S. economy. Most recently, the U.S. economy has not been roaring. There are certain pockets of the U.S. economy that are doing well, and artificial intelligence, the large technology firms which had captured the lion's share of stock market price appreciation. But you look beyond certain segments, and the economy is doing rather well, you could actually say poorly. Jobs creation last year was 1/8 of the level of jobs creation in the previous year. 181,000 jobs added. That works out to 15,000 jobs added a month. The saving grace of that equation is that there's less demand and less supply of workers because of changes in immigration. Remember, just a few days ago, we had annualized fourth quarter GDP reported at a lower than expected 1.4%. And the principal reason for that, let's say, less than hoped for or expected showing was that the federal government shutdown had trimmed about 1.2% of annualized growth off of GDP. It is thought we're going to recapture the lion's share of that here in the current quarter. I mentioned the jobs creation angle. For many months now, it's basically been healthcare and social assistance that have been driving job growth. That is hardly the foundation for a roaring or booming economy. One more thing, and that is the affordability question that you referenced at the top. It is true that month over month and year over year inflation gauges have generally been looking better. The most recent example of that is core PCE, the Federal Reserve's preferred inflation gauge, was up 3% a month in the latest month. That's still well above the Fed's 2% target, and the Fed is not expected to hit that target for at least a couple of years. And so the main thing, I think, is that most Americans do not look at this affordability question as, well, what happened with inflation last month? What happened with inflation year over year? What they do look at is the fact that price levels continue to go higher. And so it's unlikely that the bulk of prices are going to go lower. That's the kind of thing that only happens during a recession. There's no consensus that a recession is at our doorstep. So the challenge for the administration is to get this better under control between now and the midterms.
So you mentioned a lot of things there that I wanted to touch on. So perfect. It was a great opening start there, specifically when it comes to the job numbers and the job growth. It's something else that the president talks about. I'm going to move on to this next question, though. Obviously, the president mentioned a lot of policies within that State of the Union address. Now, Mark, from your understanding as an economist, which of these economic measures that he mentioned are most likely to affect the average American's financial well-being?
It's a good question. First of all, let's sort of go down the top of the things that he seemed to highlight the most, and we know that he loves to talk about the performance of the stock market. He also talked about lower mortgage rates. Well, it just so happens that the White House really doesn't have a lever to pull for either of those things by and large. You want to do no harm. One can rightly argue that the policies under the Biden administration largely aimed at keeping the economy from going into a ditch. And of course, let's remember that President Trump was in office for the first year of the pandemic in 2020. Many of those things were thought to be very much needed on a bipartisan basis, by the way, to keep the economy from experiencing a severe, prolonged recession. Steve Mnuchin, the then Trump Treasury Secretary, talked about a possibility of a 25% unemployment rate. We were at nearly 15 for a month, but the recovery occurred almost immediately after April of 2020. So it is positive to see, for example, the bank rate average of the 30-year fixed rate mortgage in the latest week moving down to 6.09%. And it is true that well-qualified borrowers who want to buy a house or are planning to do it in the process can nab a mortgage that is in the high 5% range. But the real pain point here is the fact that home prices have continued to go higher. The other thing is, and I think it's absolutely going to be something that resonates on a louder and louder basis, if not in this election cycle, thereafter. And that is, the president talked about there would never be any harm done to Social Security and also mentioned Medicare. Well, the reality is that those programs are facing funding shortfalls, and the president mentioned nothing about doing anything to address those funding shortfalls. So if the shortfalls are not dealt with, if there is not a sort of a reconfiguration of how Social Security is funded and how the benefits are delivered, there is going to be, without a doubt, a mandatory reduction in benefits by 2032 of approximately 20% or more. So I can understand why he didn't want to tackle that subject, because it is a complicated one, but the electorate is concerned about this. We've seen that in our own Bankrate surveys, where they indicate that the majority of Americans expect to need their Social Security benefits to pay for necessities. That's future retirees. And yet a majority also are skeptical that those benefits will be there. We'd also mention the tariffs, because that was in your polling question, tariffs and the economy. Our Bankrate survey has indicated that a majority of Americans believe that tariffs are bad for their personal finances. And I know the president referenced that somehow, one day this could be a substitute for the income tax, but that math just doesn't add up.
I'm glad that you mentioned tariffs. It really segues us perfectly to this next point that I would like to get to. First, a social media post from Peter Navarro. He says the president's economy runs on 4 engines: tax release, deregulation, strategic energy dominance, strategic tariffs. The payoff is clear: protected domestic production, rising investment, stronger productivity, and higher real wages, plus hundreds of billions in tariff revenue to offset Biden-era debt. Dow 50,000 isn't a bubble. Let's talk about tariffs a little bit more, Mark, because that's a word that we have heard consistently since President Trump came back into office for his second term. So what impact really do these tariff policy shifts have on inflation, trade balances, and really just American citizens, American consumers as a whole?
Well, they have become a source of revenue for the federal government. There's no doubt of that. But of course, the Supreme Court ruling on Friday puts that in question, at least to some degree. We know the president has followed with the Section 122 authority to try to replace some of those. But without intervention by Congress, those run out in 150 days. So the sustainability of those tax revenues is definitely in question. Let's just sort of boil it down to what we know tariffs do. They are a tax on imports to be paid in some combination by the importer and ultimately possibly paid on, or I should say passed along to the consumer. And so when I referenced those elevated inflation numbers just a few minutes ago, that's the primary reason why the Federal Reserve has not cut interest rates more than it had, having cut rates 3 times at the end of last year, because it's concerned that there may still be some price increases passed on through to the consumer because the tariffs remain a fact of life. And with the back and forth on the part of the administration, we're not quite sure whether the latest tariffs are 10 or 15%, despite the Truth Social post. Let's just assume that that's resolved at some point in the future. It's unclear, for example, what companies will do to react to that. But, if they have higher costs that they have to pass along, and this really hurts small business more than anybody else, that's a significant headwind for the U.S. economy. So I think that there are 3 durable descriptions that we can apply to this economy that are likely to persist. One is disruption, the other is volatility, and the third is uncertainty. And just think about the way that the tariffs are so much in motion all of the time. It makes it very difficult for businesses to plan. And of course, consumers are, I would say, dispirited about the fact that they are persistent, but obviously having to try to react. And it may well be that, as many members of the Federal Reserve believe, that these are one-time price adjustments. So you're adjusting those prices at a higher level. But it's the higher level that upsets most consumers more than anything else. They would like to have prices, unlikely to see this, but let's say back to 2021 levels.
Mark Hamrick, the Senior Economic Analyst at Bankrate. We appreciate your time here at Live Now from Fox. The economy, affordability, it was the main issue that Americans wanted President Trump to tackle during that speech. I'm glad that you were able to join us just to break it down and talk a little bit about how some of these economic policies are affecting the everyday consumer and what we have to look forward to in the coming months. Mark, we hope to check in with you soon.
Thanks so much. Great to be with you.
Of course.